How to rebalance your investment portfolio like a CPA and certified financial planner would. I'm Rizek, I'm both, and I'm going to hook you up. Rebalancing your portfolio is being smart and making sure that your portfolio is in line with your goals and objectives. Hopefully, you're invested in a lot of different things. We call that diversification. Some of those assets may go up, some will go down, and some might be right in the middle. By having a diverse portfolio, you're able to be tax strategic when you readjust. Because over time, maybe some of your bond positions are much lower than your stock, and you'll want to readjust those. Or vice versa. If you're doing this inside of a taxable account, it's increasingly important that you're aware. Of course, if you're doing this in a 401k, IRA, or one of my favorite investing accounts, a health savings account, you don't have to worry because those are qualified retirement accounts. Well, at least I think the HSA is a qualified retirement account. It certainly is a tax shelter, so you'll give me that. So one strategy that you're going to want to consider if you are going to readjust your portfolio is tax loss harvesting. Essentially, when we do tax loss harvesting, we want to recognize a strategic amount of capital gains and losses to offset those gains so we can minimize the tax liability that we'll face. When it comes to gains and losses, there's really two types, short-term and long-term. Long-term capital gains gets a much more favorable tax rate, especially when you compare it to the ordinary income tax rate that you pay on short-term capital gains. When you're doing tax planning, you're going to match up the short-term gains and losses and then net those out together. With the long-term gains and losses, you'll do the same thing. Then, once you've done both of those, you'll look at offsetting. Now, potentially, if you generate a capital loss, you're able to deduct up to $3,000 married filing jointly against your ordinary income. That's just a big way of saying if you generate a loss from your investments of $3,000, you can offset your day job or W-2 income for up to $3,000. Don't worry though, if you've generated a significant loss in 2022, you can carry that loss forward and use it in upcoming years. But, we really don't like to do that. As a CPA and certified financial planner, I want to be strategic on how much losses I'm recognizing today and use them in the future when I need them. One more word for you, realized versus unrealized. A realized gain or loss is when you've actually sold that investment. Unrealized just means it's sitting on the books, kind of like an accounting entry. You haven't yet sold it, but if you were, that would be the value. The reason Silicon Valley Bank is going through the headache that they are is because they had so many unrealized losses in their bond portfolio. And they were forced to recognize those losses or sell them when there was a run on the bank. Just some cool facts for you. Now you know. Follow me for more smart money moves.